So unlike the freak storm that we had yesterday and all the trees coming down, the market for the luxury market in Steamboat for over 2 million for August was considerably up. Hi, this is John James with the James team at REMAX Partners, and yesterday was quite a day. We had, you can see right there, that's our casualty in our backyard. We had another branch come down, but man, there were hundreds of trees that came down all over Steamboat from that freak storm with hurricane force winds. Thankfully, nobody was hurt, and there doesn't seem to be that much damage. Probably a little bit, but we'll see over the next few days. But a lot of trees came down. But going back to the subject at hand, the luxury market for Steamboat Springs. And August was a pretty good month. One indicator in our main indicators that was a little low was the median sold price. Last year we had 2.745 million as our median sold price for August of 2019. This year, it's down about 7.6% to 2,537,353. But our other two main indicators, those are both still doing pretty well. The number of sales went from 32 to 42. That is up 31.3%. And the sales volume, that's the biggie. Last year was about almost 111 million for August of 2019. This year, almost 135 million, $134,937,905. That's up 21.9%. Now let's take a look at inventory. This is the one we're always really kind of concerned about. Do we have enough? And it seems to keep getting lower and lower. Days on market. Last year was 200 days on market. Now it's down to 185. And that's an 8.5% drop. We haven't been seeing very much on days on market going down for most indicators, most segments of the market. Actually, it's been going up because a lot have been sitting. But now we've been seeing that that's starting to go down, and especially in the luxury market, that's pretty key. As far as our month supply, this is where things are really, really changing. Last year, the month supply was about 25.3 months. So that's a little over 2 years. This year, it's down to 15.4 months. It would take just a little over a year to sell all of our luxury properties that we're in for August. That's down 39.1% for August. It's kind of crazy. And let's see what inventory we actually have. Active listings, we went from 78 active listings down to 60. That's a drop of 23.1%. And new listings, we like to see that coming on. And that's one that thankfully is up in here. We had 78 last year, and we're up to 107 new listings for the month of August. That's an increase of 30.5%. So pretty good right there. Kind of looking at the value, that's a little down. The sales to list price ratio last year was 95.7%, and now it's down 0.9% to 94.8%. So that's where, if you were selling a property, you're getting still pretty darn close to your list price, and at that number, that's a good. Even just a little bit off, you're still doing pretty well. As far as price reductions are equal to what we saw in August of 2019. Future indicators. So what do we expect to see coming up? Pending listings. Last year we had 43 for the month of August. This year we have 81. So that's an 88.4% increase. That's pretty big. We're looking for a pretty strong September as well. And back on market, last year we didn't have any for the month of August. This year we had 16. And as I've been saying, A lot of those back on markets are, people kind of coming out and seeing what they bought online and saying, not for me, not really there. There might be some inspection items as well, but more back on markets. I'm expecting to see that continue as a trend. Now let's look at our COVID stats. Again, this is the last month we're doing it, starting with the number of sales. For March through August of this year, they are up 9.5%. Now, let's compare that to what it was last year. March to August, it was up 9.3%. So it's a 0.2% positive differential, meaning COVID is not having a negative effect on sales in the luxury market anymore. And then as far as sales volume was down 2.7% from March to August. That's compared to last year, where it was up 18.9% from March to August. So that's a 21.6% differential. Sales volume is still needs a bit to catch up, but the number of sales, that's happening. And I don't think we need to cover those nearly as much anymore. That's doing it for our price segments. We're going to move into type segments with single family homes and condos and townhomes, and then we'll get into the areas of south, north, and west route. I hope everything goes well. We'll be cleaning up here in Steamboat for a number of days, but hope you guys all do well and take care.